Friends, you might not believe this, but just in the span of 1 year, the interest has almost matched the principal on my 200,000 RMB debt. This, I think, is what makes the debt so terrifying. It can cause someone with a monthly income of 5 to 6,000 RMB to completely collapse in less than 2 years. Take online loans as an example. The scariest part isn't the high interest rates, it's that these platforms have designed a trap, waiting for us to fall into. Once you're caught, it's like a bug stuck in glue. The more you struggle, the deeper you sink.
When
you have a debt over 100,000, you feel like you can't live anymore, like you can't move forward. Let me show you how much I owe. Here, it's 2 million RMB and 330,000 RMB. And that's from the construction board. How much? 740,000 RMB. And there's 700,000 RMB from little Yuzi's family. And there's still more. Look, here's another 300,000 RMB. They're all overdue.
Many people in China are currently burdened by debt. To repay mortgages and cover daily expenses, many rely on loans to survive. China's online lending platforms have low barriers to entry, leading an increasing number of people to live off loans, especially those who have long struggled to find work. For them, online lending has become almost the only option. Generally, online lending platforms can be categorized into 3 types. Large platforms like Alibaba's Huabei and JD.com's Baiqiao rely on the companies. These platforms are similar to credit cards, with strict qualification checks and strong enforcement. Medium-sized platforms like Dai are internet-based loan services. There are also smaller platforms and high-interest lenders. To compete with banks and large platforms, smaller lending services are increasingly promoting their loans as low risk, quick, and easy. But borrowers are often unable to pay off the loan early. Instead, they're locked into installment plans that ensure interest continues to accumulate. However, online loans come with higher interest rates than banks. According to Mr. Wang, a frequent borrower, if he borrows 10,000 RMB from major platforms like JD or Alibaba, he might end up paying 11,000 RMB. However, if he borrows from smaller platforms, the repayment could rise to 13,000 RMB. Caixin also reported a case of predatory lending in April. Professor Jiang Shufeng from Shandong University's economic department mistakenly applied for a loan with an annual interest rate of 24% through JD Financial's Jintiao platform. The platform then loaned him 108,000 RMB. When he realized his mistake, he immediately paid off the loan, but the platform still demanded that he pay an additional 3,240 RMB in interest, resulting in an annualized interest rate of 1,080%. This borrow-to-pay system has led many Chinese deeper into debt.
When
I was 22, online loans nearly drove me to the edge. Watching my 40,000 RMB balloon to 120,000 felt like being forced to eat something vile while paying for the paper to wipe my mouth. I remember the first time I got a debt collector's call. It was night before work ended. I was working as a furniture salesman, and the caller greeted me by cursing my whole family. At that moment, I realized what it feels like for your legs to go weak.
The following TikToker shared how online loans caused his divorce. He explained that online loans hurt his wife deeply, and although he didn't blame her, the stress of the situation led to their separation.
36岁用网贷10年，从未逾期。
I'm 36 now. I've been using online loans for 10 years without ever being late, but 2 months ago everything collapsed. I owe 2 million RMB now. Over the last decade, I've paid back 1.45 million, and I still owe 450,000.
He said that after his close friends introduced him to online lending, he first used the 360 platform with a loan limit of over 30,000 RMB. At first, he thought that paying back 2,000 or 3,000 RMB a month was manageable on his monthly salary. The first and second months went smoothly, but by the third, he couldn't keep up the repayments. At that point, he started borrowing from other platforms, and before long, his debt ballooned to over 300,000 RMB. Eventually, he confessed to his family, telling them he owed 250,000 RMB, which was within their financial ability. His parents paid it off, leaving him with over 70,000 RMB, which he used to continue borrowing, increasing his debt to over 400,000 RMB. At this point, he confessed a second time. To pay off the loans, he sold his house in a small third-tier county, along with his garage, for a total of over 400,000 RMB. However, after paying off the bank loans, only a part of the debt was cleared, and the remaining 200,000 RMB was still his responsibility. The interest continued to roll over, bringing the debt back up to over 300,000 RMB. He borrowed over 200,000 RMB from a close friend, but by June of this year, the debt was once again over 300,000 RMB. In his final confession, his family could no longer bear the burden. They had lost their house and car, and now there was so much debt. His wife chose to divorce him. The wife had known him since they were both 15 or 16 years old, and they'd been together for 20 years. However, she could not tolerate the burden of the online loans any longer. The harassment from debt collectors who targeted his family and colleagues left him isolated and stigmatized. It's not just him. Many others are facing similar challenges. One TikToker has repeatedly warned against taking online loans, advising others that the interest will quickly spiral out of control.
不管你有多穷，算我求你了。
Please, no matter how poor you are, I beg you, don't take out online loans. Don't do it. I'm living proof. Right now, I earn about 5,000 RMB a month, and once it comes in, it's gone. I even have to borrow money just to make ends meet, all to pay off these online loans.
He explained that online loan interest rates are around 20% annually, roughly 20 percentage points higher than traditional banks. For example, borrowing 5,000 RMB could mean paying an extra 2,000 to 3,000 RMB in interest. Before turning to online loans, his monthly salary was only 3,000 to 4,000 RMB, but he could still save about 2,000. After getting involved with these platforms, his wages no longer covered expenses, savings disappeared, and he began spending beyond his means. This led to borrowing more loans to pay off existing ones. He described it as addictive. Once the paycheck was gone, he would think about borrowing again, assuming next month's salary could cover it. But over time, the cycle repeated, the number of platforms multiplied, and the debt became a bottomless pit. Another TikToker also warned people not to take out online loans.
千万不要借网贷，千万不要借网贷，千万不要借网贷。
Never take out online loans. Do you know how scary it is to live off loans? It's been 3 years and I still haven't gotten out of it. I might even lose my 205 square meter house soon. It's honestly heartbreaking.
10万块钱的网贷，以贷养贷3年会膨胀到什么程度？
What happens if you let a 100,000 RMB online loan roll over for 3 years? It's not an exaggeration. It can grow to the point where you'll never be able to repay it. These loans use a 1-year plan where you only pay the interest, and every month you pay more than 8,300 RMB in principal, plus over 920 RMB in interest. With that, your salary of 10,000 RMB isn't enough. If you don't want everything to collapse, the only option is to borrow more to pay off the old debt, and then the platform might drop you. Those with good credit end up even deeper in debt, losing their homes, selling their cars, and even draining their parents' savings for funerals.
Despite the warnings, millions of Chinese people are already burdened with debt. According to estimates by Gavical Dragonomics, in 2024, between 25 and 34 million people in China had defaulted on personal loans. That figure has doubled in just 5 years. If overdue but not yet defaulted loans are included, the number of high-risk borrowers rises to between 61 and 83 million people, equivalent to 5 to 7% of the population over the age of 15. The true scale of household debt remains unclear, as official data has never been fully disclosed and estimates vary widely. China's central bank reported in its fourth quarter 2024 financial statistics that household loans within the banking system stood at 89.7 trillion RMB, a 7.3% increase year-on-year. But the central bank's own research institute put the figure much higher, at 103.5 trillion RMB, 15% above the official number. A separate survey by the China Institute for Income Distribution at Beijing Normal University suggested that household debt could be as high as 200 trillion RMB, twice the official figure. On July 7th, The Economist published an article titled, "Why So Many Chinese Are Drowning in Debt." It noted that before the economy slowed, people routinely borrowed large sums from major online platforms such as Alipay and WeBank. On July 9th, BBC Chinese reported that the soaring number of defaults was tied to lending platforms deliberately minimizing the perceived burden of borrowing. This strategy encouraged borrowing and spending, ironically in line with the government's years-long campaign to stimulate consumption. Chinese state media have also highlighted cases of predatory lending. In March, the paper reported on a loan of just 1,560 RMB that accrued 13,764 RMB in interest within 17 days, an example of outright usury. The Economist article also cited the story of Lily, a Shanghai millennial who shared her debt experience on social media. She explained that some people even compared who owed more, with one person claiming to owe 10 million and another even claiming to owe 100 million. Lily fell into debt after the software company she worked for stopped paying salaries. She owed 30,000 RMB to online lending platforms. What caused her the most pain, however, was borrowing money online to cover household expenses. These platforms often hire collectors to harass debtors and even their parents. She said Chinese families rarely tell parents bad news, but her parents were deeply affected. The harassment drove her into depression. Eventually, her husband left her. Regardless of how it starts, many Chinese today are trapped in debt, forced to deal with aggressive collectors. Financial vlogger Border China Talk recently pointed out that while the government does not disclose exact figures, the number of people labeled as dishonest persons subject to enforcement offers a glimpse of the trend. These are individuals who have fallen into serious debt. As of June 2019, there were 14.4 million people on this list, meaning at least 1 in every 100 Chinese had been flagged. According to China's National Enforcement Information System, as of May 16th this year, the official number of such debtors stood at 8.6 million. Southern Weekly reported on 62-year-old Sang Lichuan, a former general manager of a food quality control company. Due to financing difficulties, he took on personal debt of 20 million RMB and ended up in the discredited list. He said that his entrepreneurial journey faltered after his credit was tarnished, and no one wanted to cooperate with him. His access to financing was also cut off. Today, he struggles to cover basic living expenses and relies on borrowing from various sources to survive. Another e-commerce worker named Yang shared his experience. After his company went bankrupt, he personally owed 3 million RMB and had to rely on his family's bank cards for daily expenses. He recalled an incident where he deposited over 20,000 RMB into a new bank account to cover his daughter's school fees and his mother's hypertension treatment. But the bank quickly deducted the funds. One former entrepreneur who had fallen into debt mentioned that after losing his credit, he worked as a ride-hailing driver. However, even his pension, which met the minimum living standard as allowed by the court, was seized by the bank. He couldn't even keep enough for basic living expenses. Founder Wang Guoan of Guangzhou Han-Ho Cosmetics shared his perspective in the video. He explained that once a person enters the discredited list, their reputation is destroyed, opportunities vanish, and they become trapped. He added that even basic travel outside the city required a dedicated driver. His faith also crumbled as he realized it would be nearly impossible to rebuild. In China, both company and bankruptcy laws prioritize protecting creditors, which are usually large state-owned entities like banks. However, entrepreneurs are left in difficult situations, contributing to the surge in discredited individuals. In Western countries, personal bankruptcy laws followed corporate bankruptcy systems, but in China, the corporate bankruptcy law came into effect in 1986, while the personal bankruptcy system is still non-existent. Authorities argue that personal bankruptcy would encourage people to evade debt. Experts argue that having a corporate bankruptcy law without a personal bankruptcy system means companies can be restructured, but entrepreneurs facing overwhelming debt are left with few options, often resulting in desperate measures. However, financial vlogger Border China Talk believes that those facing even worse circumstances than being discredited are homeowners who have stopped paying their mortgages. Many of them are office workers. Due to worsening economic conditions and job loss, they can no longer repay their home loans, leading to properties being auctioned off. For many, years of hard work can vanish in an instant. In 2020, the number of auctioned properties in China was about 1.3 million. In 2021, it rose to 1.7 million. Border China Talk pointed out that data on auctioned properties for 2022 was no longer disclosed, hinting at the extent of the problem that the government has become unwilling to release. He speculated that the actual number of auctioned properties in 2022 could range between 3.2 and 3.8 million, with a conservative estimate of 2023 being at least 5 million. By 2024, the number remains unknown. Tianlei Huang, a researcher at the Peterson Institute for International Economics, told Voice of America that the real solution to China's economic issues lies in raising people's incomes, which would improve the country's overall financial health. He compared the U.S. approach during the pandemic, where debt issuance was followed by economic growth that outpaced debt accumulation, improving the country's debt-to-output ratio. However, China's current policies are counterproductive. The government focuses more on production, such as developing new productive forces, while neglecting consumer support. The growing personal debt crisis in China can partly be attributed to this policy misdirection, with the government's decisions playing a significant role in exacerbating the situation. Political and economic commentator Xiao Kai Talks recently noted that traditionally, Chinese people were accustomed to saving, but now the scale of the debt has shattered that sense of financial security. Mortgage debt is the largest form of debt in China. Once people are trapped in debt, they realize they have little control over their decisions, and their lives are tightly constrained. The government has used debt to stimulate consumption, hoping to boost the economy. But as the economy weakens and risks keep rising, this logic will only push more and more people deeper into despair. On the surface, it may seem like the government is helping fulfill people's dreams, but in reality, it's providing a short-term fix for the economy at a high long-term cost. Xiao Kai Talks warned that every loan feels like an invisible rope tightening around the debtor's future. These debts are like ticking time bombs, which could explode at any time if income stops or if the economic environment worsens. When platforms lend money, they don't plan to collect it all back. If they don't recover the debt, they bundle it up and sell it as an asset. This is known as bad asset disposal. Whether to resort to aggressive debt collection becomes a decision for a third-party agency. Once debt is linked to aggressive collection, China could face more and more tragic outcomes in its society.